Morning everyone, and welcome to the third and final instalment of the Access to Finance Funding Future Growth webinar series, delivered in partnership by Chartered Accountants Ulster Society and British Business Bank. Hopefully a familiar face to you all at this stage, but for those of you that don't know me, I'm Susan Nightingale, Senior Manager for Northern Ireland within British Business Bank, and also a member of both the main and public sector committees within the Ulster Society. Over the last number of weeks in each of our sessions, we have explored a variety of finance options available to support ambitious SMEs on their growth journey. Last week, we focused on our scale-ups and the positive impact of equity funding and investor value add, not just to typical tech or software companies like Clarendon, but also to the more traditional family-owned businesses like coffee shop chain Bob and Bert's. We heard firsthand how important it is for the advisors to encourage clients to think big and embed ambition to scale into everyday conversations, to signpost and promote equity as a viable funding option, and the important role you play in providing the financial models and information necessary to secure this type of investment. We also explored the range of government programmes delivered by Innovate UK and British Business Bank and the positive impact they have on the ground across Northern Ireland. If you missed it and would like to listen back, the recording is available on the Ulster Society webpage, and I've also shared it on LinkedIn as well. Today, we're going to shift our attention slightly and focus on angel finance. So whether you're advising early stage companies on their finance options or advising high net worth clients on how to best maximise their investments, there'll be something for you in today's session. In terms of takeaways, I want you to leave with three things at the end. Firstly, a better understanding of what angel finance is and the important role it plays in helping to create the next generation of scale-ups. Secondly, a better understanding of the types of companies that can benefit from it and the various funding options that sit alongside it. And finally, a clear understanding of the benefits of encouraging clients to become angel investors, of joining a network, and just how to go about it. So in terms of what we can expect from today's agenda, very little from me today. It will be over to our co-hosts Rod and Jenny from UKBAA. So Rod, Managing Director of UKBAA, will provide an overview of angel investment and its importance in supporting a thriving high-growth ecosystem. We'll then hear from Christina O'Neill, CEO of VascVersa, as she talks through how angel finance, along with Innovate UK grant monies and funding from QUBIS and Co-Fund, have allowed her to further develop the business. Mark Brownridge, Director General of EIS Association, will talk about the benefits and incentives associated with the Enterprise Investment Scheme. And finally, Jenny Tooth, CEO of UKBAA, will talk to some of NI's most active and experienced angel investors, Mary Mckenna and Michael Harding, as well as John Phelan of HBAN, who will talk about the structures and networks available to support both aspiring and established angel investors. So plenty to keep us entertained between now and 12. So without any further ado, Rod, I'll hand over to you.
Great, thank you, Susan. It's a real privilege to be invited to speak today. So huge thanks to you, Susan, for helping, and also to the wider team at the BBB, and of course to the Chartered Accountants Ireland as well. Really today, this kind of opening session, I really wanted to share a little bit and give a bit of a flavour for what the UK seed investment ecosystem looks like, and specifically where Northern Ireland stands up against it, and then talk a bit more about angel investing and where we think it brings a lot of support to the ecosystem. So yes, I'm Roderick Beer, the Managing Director at the UK Business Angel Association. I've been 17 years in angel investment, and now run and support the trade body. So who are we? Well, the UKBAA are a not-for-profit, privately funded by our 220 member organisations, a trade association for angel and early stage investing. So we look after lots of angel groups, investment platforms, accelerators, investment funds. British Business Bank are members of ours, including many others in between. Collectively, our members deploy over £2 billion every year into fast growth UK-based businesses. And as a trade association, our job is broken into three kind of key areas, I guess. One is around connectivity. We're really keen to help great investors meet other great investors and have great access to deal flow too, whether that's nationally or indeed based in different of the nations or the different regions of the United Kingdom as well. We are also really keen on education. We want investors to invest effectively, to maximize returns fundamentally, to learn how to invest successfully into fantastic businesses. That's a really big part of what we do. And finally, that representation piece is key to us as well, where we conduct a lot of research, we understand the challenges, the choke points for our industry, and then we'll champion for change to bring about and make our industry better. And whether that's looking at regional disparities of investment, or lack of diversity in investment, or looking at not enough investment going into crucial sectors, we will fight that cause if we think that is right. So I want to start off a little bit by giving a bit of an overview as to what we kind of mean by seed investment. And just gonna, I promise you all, this is the only graph that you're going to look at from my presentation today. But this is a kind of a bit of a simplified version of the investment market globally, in fact, not just in the UK. If you look at the right-hand side, you have exciting public markets, IPOs, returns, unicorns, huge amounts of wealth and success for both the founders, the investors early on, but also the employees for these businesses and for innovation in itself as well. But on the left-hand side is where that journey starts. So you hear a lot in the press about, you know, the latest unicorns with their fantastic exits and huge returns, but they start early on. They start with friends and family funding. And then as they move and grow and start to show some level of traction, it's angel funding and seed VC funding that really help support and grow these businesses. In fact, it's one of the only sources of equity funding comes from angels at that early stage. So it's a really important part of the ecosystem. Yes, we love to see, you know, IPOs and successful growth and acquisitions, but it starts earlier on. It starts at a different time. So a bit of a review on UK, the size and shape of UK seed. The UK as a whole is one of the best places to start a business in the world. It is incredibly advanced for its size. There are over 390 accelerator programs, incubator programs, churning out thousands of businesses every single year. In fact, there's some great accelerator programs and support infrastructure in Northern Ireland. We have a phenomenal tax break, which you'll hear a lot more about later from Mark Brownridge, but collectively over £2 billion is invested under this tax break every single year. The amount of investment going into early stage businesses is way in advance of the rest of mainland Europe. We are in fact a little bit behind the US, but actually it's an incredibly vibrant and successful ecosystem. There are now 224 investment funds with a base in the UK that can, and sometimes do, write a check at that seed early stage. And that number is growing, which is really good to see. But, and it is quite a big but, and in fact, you'll see the purple splot on the screen, about 2/3 of that early stage investment is going into London-based businesses. And as you go further up and along that investment market chain, that number, that ratio gets worse and worse. This is a hugely London-centric and Southeast, Cambridge, Oxford, Golden Triangle-centric ecosystem. And that can be a real challenge because actually Northern Ireland has some amazing businesses. If we drill down a little bit on the numbers more specifically, there are 300 seed stage businesses in Northern Ireland being tracked right now, which is a really exciting amount. There are 286 scale-ups. Now, scale-ups, I'm sure you would have heard from the previous sessions, are companies that are growing at 20% per annum in either revenue or in employees. So that's really exciting. In fact, that's about 2% of the whole of the UK, which is pretty good going. But when you look at the investment side, when we look at EIS and SEIS, that early stage investment piece, the amount that's going into Northern Ireland-based businesses is less than 1%. So you've got 2% of the businesses, but less than 1% of the actual early stage investment. And I worked it out on a napkin. It's about £50,000 per annum per company. And that does not make an exciting high growth business with 50K. That's not going to go very far. There's only one visible angel group. I'm sure I'm going to be corrected in the chat, but I only know of HBAN meaningfully. There may be other syndicates and smaller sub syndicates that I'm less familiar with, but Googling, having a look at, and my years of experience is only really one group based in Northern Ireland. And our research of angels and where they are, only 0.7% of angels are based in Northern Ireland. When you've got 2% of the UK scale-ups, but only less than half of that amount in investors, it shows that it's not quite adding up. You do not have you do not have enough angels within your community, in my view. Now, why But why is angel investing important? Which is a really big question, and this is what I'm hopefully going to answer. And in fact, the rest of the session, you're really going to get a good understanding about angel investing generally as well, and the importance and the value it brings. But to give you a bit of an overview, fundamentally, angels attract funding. They are investing, yes, into businesses and giving them the funding that they need to grow, build, and scale, but they're bringing other investors around them. It's not just their own checks, it's the checks brought in by their friends, by their colleagues, by their associates. It's also the fact that grant funding, which is a phenomenal source of support and capital for businesses, for investment for businesses, are generally match funding. So they have to have some equity there or some funding there to attract and draw down this grant, sometimes 50-50, sometimes 70-30. But to draw down a grant, you have to be able to match it with funding. And that's where the angel money kicks in. It can also attract co-funding. Northern Ireland is pretty well spoilt for fantastic co-funds, if in my personal view, and you'll hear from them coming up as well. But they are co-funds. They are not all of the funding. They go in alongside existing investors. So you need that early stage investor initially to help draw down and attract these other very exciting sources of funding. Angels also provide support. In fact, 80% of angels are providing strategic advice to their investing businesses. They're providing strategic advice. They're bringing in introductions to potential customers, to markets, introductions to potential key members of the team, introductions to new funders. They also provide insight. Angels have often had experience within the industry or experience running businesses and have a lot that they can give back to these businesses in turn. And this combination unlocks growth. Over 60% of the UK scale-ups across the whole of the UK have angel funding in them. They are a key part of an ecosystem if you wanted to grow and thrive and scale. And it's not just one way. Angel investing, there are other benefits for angels who get involved as well. In fact, we've recently conducted a bit of research alongside investors. We've looked at the portfolio returns across, I think, 50 angels and worked out a weighted average of 13.1% IRR return. And that does not include the very attractive tax breaks you'll hear about a little bit later. And that stacks up pretty well on the kind of growth rate of the similar period for AIM, for the FTSE 100. You know, this is a pretty good per annum return rate. So angels are getting good returns. And in fact, some research for a whole market approach research conducted by Newable and Bohurst showed over a 20% return, per annum return, not including the tax breaks, which, as I've mentioned, you will hear about. And it's this funding, this attracting this funding and bringing this in there, which makes a huge benefit. When we look at the government's backed incentives, the government have understand the importance of angel investment, of early stage investing. And actually they've put together and put in place some really exciting initiatives to really help build and support that. First and foremost is the ES and EIS schemes, which you'll hear about later. But the EISA, Mark Brownridge's outfit, has estimated that for every £1 invested at EIS, £4 of value goes back. And with grants, Innovate UK estimate that for every £1 provided as a grant to an early stage business, there's £7 of value created. And that value is created where that business is based. It is based, they are hiring locally, they are spending locally. It is where the company is based. So that's some huge return to a local ecosystem. And the government has also supported some really exciting, some very effective co-funding implements as well. So there's this list of Co-Fund NI, Invest NI, Techstart, QUBIS we'll hear from later as well. So there's some fantastic co-funding to really help support this industry. But it is all co-funding. EIS goes in alongside, it is for angel investors. Grant funding goes in alongside equity. Co-funding goes in alongside equity from angels. So angels are crucial. And the big challenge that I see is that 69%, like 70% of angels are investing inside their own home region. So if you want to see this growth, these exciting exits, this huge value creation for your local community, you really need to look at growing and building and scaling angel investing on your home territory. It's incredibly important. What you will see, and we are seeing, is a significant increase in investors from outside of Northern Ireland getting more and more involved, which is great for the ecosystem. It is great for those investors, but I can't help but think that you are missing out locally by not investing yourself. These investors from Par Equity are getting involved more. Startup Funding Club are investing much more. In fact, we have an angel who's invested locally into a great business who isn't based in Northern Ireland, and they are getting these great benefits. And The benefits, it's not just from an angel perspective, the returns, you're also giving back. It creates a huge value for the local community, both in the business, as I mentioned, recruiting, scaling, spending locally, but also these businesses are often tackling global challenges, societal challenges that are improving the world that we live in, whether it's in health technology, in green technology, whether it's financial inclusion. There are a lot of businesses that are being funded by investors at early stages are making a difference. And we're going to get a prime example of that coming up in the panel session shortly. So if you think that Northern Ireland needs more funding from the stats that I've shown, if you feel like that is something that is going to really help support this local community, then I have some next steps for you. Yes, you're going to learn a lot more about how angel investing works from a founder perspective. So if you're advising clients who are looking for funding at early stages, you're going to learn a lot more about how that works and operates. But if you feel you also have relationships with high net worth or those who could be angel investors, and just to remind you, being an angel investor, you do not have to be an ultra high net worth or a super wealthy individual. The average check size per investor per deal is about 15 to 20 grand. Some of the most successful angels out there are writing £10,000 checks to businesses. So it is well within the grasp of many mere mortal as well. So do think about that, and whether you think that your business or your relationships or your contacts might be able to reach out and find some great new exciting angels to really support some really exciting businesses coming out from Northern Ireland. So a few key steps. Step number one, carry on watching. We've got some fantastic panels and discussions talking from EIS and SEIS, the different funding sources and how they work together. We're going to, mentioned already, Jenny's going to be interviewing some experienced angels and talking about their journey and what it looks like. Reach out to hban.org. They're an all-Ireland angel group with a Northern Ireland aspect of that, managed by Clarendon, who also run the co-funds as well. And we're going to hear from them as well later today. And or speak to me at UKBAA. We're going to be sharing details, my email details, to all those who registered as well shortly. So I'm very happy to have a chat. It is our job at UKBAA. We are literally made and designed to help build, grow and scale exciting angel initiatives. We want more angel investing. We know the value it brings to a local community. We want it to happen, and we're very happy to help wherever possible to make that happen. Also, feel free to check out our website, which is all good fun as well, ukbaa.org.uk. Lots of free and helpful stuff. Well, look, that's it from me and my discussion. Now I want to bring up some real experts to join us as well. And I've got we've got a great panel session lined up for you now. So I'd like to welcome up our panelists for today. So if you could turn on your cameras and turn on your microphones and turn on to welcome up Christina O'Neill, Oisin, Lappin, Stuart, Gaffikin and Tim Allsopp as well. So if you can turn your cameras on, there you all are. Thank you very much for joining us. I think let's kick things off as we move into this panel session by asking my panelists to introduce yourselves. And we'll start, I've got it on my list, from the top of my list and down. Christina, do you want to introduce yourself, explain a bit about your business as well?
Okay, thank you for the opportunity today. I'm delighted to present at this panel. So my name is Christina O'Neill and I'm the co-founder and CEO of VascVersa. So VascVersa is a relatively new spin-out company from Queen's University in Belfast, and it's focused on regenerative medicine. So maybe a little bit of background about how this came about. I have been a research scientist in the field of vascular biology for over a decade. But I guess my ultimate goal was to translate all of this research and all of this foundations of science built over the years into developing a new therapy for vascular disease. And the opportunity to do this really came about through the iCure program. And I know that we're going to discuss the iCure program a little bit in more detail. So I'm happy to leave it there, Rod, or I can continue to describe it, but maybe we'll keep that for later.
Yeah, let's say that one. Keep that up our sleeves. Oisin, do you want to introduce yourself?
Yeah, so I'm Oisin Lappin. I'm the corporate manager, corporate finance manager at QUBIS, which is the commercialization arm of Queen's University. So we're, as Christina alluded to there, we're responsible for spinning out the technology out of the university, so commercializing it into companies. Yeah, Queen's University is also responsible for running the iCure program that Christina mentioned there for Northern Ireland, Scotland, and the north of England. So as I say, we'll talk a bit more about that later.
Thanks, Oisin. Stuart, introduce yourself.
Thanks, Rod. Stuart Gaffigan from Clarendon Fund Managers. I'm an investment manager there, and there's really two parts to our business. The first, you alluded to, Rod, we manage the co-fund, which is one of the Invest in Northern Ireland's access to finance suite of funds. It's supported or funded by Invest in Northern Ireland, but also more recently by the British Business Investments, which is part of the British Business Bank. So we have a portfolio of around 84 early stage companies, which we look to invest into in Northern Ireland. The other part of our business is HBAN, which is the Halo and Business Angel Network. And again, we manage the Northern Ireland element of that. And that is a vehicle by which we can put pre-screened opportunities in front of an angel grouping of around 114 local investors, with a view to try and encourage them to invest into these companies in Northern Ireland.
Thank you, Stuart. And last but by no means least, Tim, do you want to introduce yourself?
Yeah, thank you, Rod, and good morning, everybody. So I'm Tim Allsopp. So I'm an angel investor in VascVersa. And I'm actually based in Suffolk, in East Anglia, in England, actually. So I'm not part of the 69% figure that Rod showed with respect to an angel investor working in their own patch. So I'm an ex-biopharma director in R&D. I run my own consultancy business. And I've also been engaged in helping other startups and foundational companies, a bit like VascVersa, to get on their feet and get going in terms of providing specialist advice and expertise, specifically in the area that Christina was alluding to. I would term it in the advanced therapies or the cell and gene therapy space. And I'm very pleased to be participating in this panel discussion.
Thanks, Tim. Let's turn first of all to Christina, because actually I think you've had funding and or support from all of the panelists here, Christina. Is that right?
Yes, absolutely, yes.
Do you want to talk us through a little bit about your funding journey as a founder and the support that you've had from, I guess, beginning as it goes through the journey? That'd be really helpful.
Okay, so I guess this all started with taking part in the iCure programme, which is the Innovation to Commercialisation of University Research programme. And essentially what it does, it allows the lab scientists to get out of the lab and test their idea. So it's a programme where you have 3 months support to do this. And the 3 months allows you to take part in a customer discovery exercise. So the funding allows you to travel worldwide. I traveled a lot actually across Europe and the US, and I spoke to 106 stakeholders actually in the end. So lots and lots of different engagement with healthcare professionals, clinicians, regenerative medicine companies. And really that was just to test our idea. Following on from that process, then there's the option to go to an options roundabout. So the options roundabout really allows you to do 3 things. The first one would be basically just to go back to the lab, building on the contacts that you've met throughout the journey and do more research to define your product better. The second would be the option to license out your technology. And then the third really is about if they think you're ready. So we were given really, really fantastic feedback at the options roundabout, and they felt we were ready. We had a really good idea to spin out our company essentially. So following on from that, they allow you then to apply for Innovate UK funding. So we did that and we successfully got through that stage, which was fantastic for us. So that really opened up a lot of opportunity then. But the Innovate UK funding is 70% funded only. So we of course had to find a 30% match. And that's where we hit a brick wall, really. We weren't sure what to do at that stage because we were essentially academics and didn't really have a big network around us. So we reached out to everyone in our network, and that's when we actually met up with Stuart at Co-Fund and I, who introduced us then to the angels. And with the support of QUBIS, we were able to tie all this funding together. So we now have a blend of funding. So we have the Innovate UK funding along with angel investor funding from 5 different angels, which is really, really essential for us because other than getting this combination of funding at this stage, even with the Innovate UK, we wouldn't been able to translate all this towards our spinning out our company. So it's really, really been essential for us.
That's really interesting. Thank you, Christina. Oisin, do you want to chat us through a little bit about your about how you supported Christina at those early stages and maybe a bit more about the iCure program as well? That could be really helpful.
Yeah, so the IQ program, it's essentially been developed, and the fundamental point of it is to work out who cares about this technologies. So the researchers are making the technology in the labs, and then it's a customer discovery process. It's finding out, is there going to be a commercial market for this technology? Which obviously in Christina's case, she's received very positive feedback there. The key thing that we ask them to do is go out and speak to over 100 customers, and really if each one of these steps to bring it as relevant to angel investing, it's to reduce the risk of each of these ideas right through. So the idea that speaking to all the customers up front, it's really honing in the business plan and the value proposition, and then they're moving through a panel, as Christina said there. They have to be recommended for spin out, so there's a natural filtration there, and then they'll go through then to the Innovate UK grant funding process. Again, there's natural filtration there as well. So by the time it comes to the angel investors off the back end of this, there's been a lot of natural steps of filtration here. So really, it's only the best ideas are getting through. So that's the fundamental purpose of that program. It's to understand what is the value proposition and to create that filtration process. Queen's helps run that program, and then we would provide support with a technology transfer officer to Christina the whole way through that process. It's a very daunting process for an academic to be going into that sort of real world commercial environment and speaking to customers. So it's about helping them within conversations, and then once you get off the back end of that, it's about helping them how to create a business plan, and what, as we'll talk about later, what is SAS tax relief, what are investors looking for, and what is your investment proposition, and creating pitch decks and things like that.
You're kind of working with these really early stage, fantastic businesses that have had a lot of IP, but are very early on, haven't yet decided where they're going to make it commercially. And you're helping them to understand their market, get them really in a state where they can go forth and get that crucial funding, that Innovate UK grant funding, which for those less familiar with it is non-dilutable cash that goes in to help further that IP. And then she made it on to Stuart. And Stuart, you kind of, I guess you received quite a few of these founders who have had potentially grant funding and kind of looking for that match. What do we do now? Do you want to chat through a little bit about the process from an equity perspective?
Yeah, as you said, Rob, we have invested in VascVersa, and I suppose from our perspective, we really like university spinouts. There's years of academic research that Christina and others will have done. There's some deep IP there. QUBIS have supported them through that journey, and it's been de-risked to a large degree. They've been through that iCure program. A lot of eyes have seen that. They've received a lot of advice. And pointed in the right direction. They've gone on, as Christina explained, to Innovate UK. Again, a very robust process. A lot of eyes have been over this, guys with a lot more sectoral and industry knowledge than we would have as accountants and investors. And then once they come to us, well, they've got that nice grant funding sum. QUBIS, the guys there are hoping or willing to put some money in, and then as you'll come on to speak to Tim, there's other angel investors as well who are prepared to put some money forward, and that really brings us into the game. As you indicated earlier, Rod, we're a co-investment fund, so we can't invest into any of these companies without there being other private investors that we can match against and take pari passu terms. So along that whole journey, the real key for us is that it has been de-risked. Christina and the guys have developed some really interesting technology. As you said, Rod, it's very early stage. It is risky, but there are protections and de-risks for investors in that SEIS and EIS play as well.
Thank you. And Tim, you wrote a check to Christina's business. You actually said, you know what, I like this. I'm going to put some money into this because I think it's a great, what were you looking for? What was your journey actually with Christina, and how did you get to know them and get involved? It'd be really interesting to find out.
Yeah, no, it's a good question actually, because I sort of have come at it in the sort of reverse or atypical manner for an angel investor, I guess. So I started working with Christina in the foundational team just after she had won her Innovate UK award, and I was brought in to provide this specialist advice in terms of the development program. And over a number of months, we worked very productively. I like to think I provided some advice that has helped Christina and the foundational team early on in setting up those plans and getting things operational. And I liked the approach. I liked the science and the technology very much, actually, which then really put me at a crossroads. It was like, how do I go about doing this in terms of mixing this opportunity in with everything else that I'm undertaking at the moment? So I decided actually to write that check to actually become an investor. And I should actually say at this point, of course, in the angel group investing in VascVersa, there are 4 of us actually. There's myself and then 3 local lads, I guess. So there's Alistair Bell, Hugh Cormacan and Michael Harding. And I was able to have a chat with the other angel investors to help them understand actually in terms of what the specialist opportunity, actually the science and the technology behind this and the very exciting investment opportunity there was. And so that sort of worked pretty well. And I'm now very pleased actually that things have started going, the company is seeded and is hopefully being able to fulfill a lot of its early stage ambitions.
Thanks, Tim. And then it goes back, and then Stuart, the co-fund comes in. I presumably you bring in, how does it work from a co-fund perspective? I mean, what's the process? What's the due diligence process? How do I go from chatting to you and saying, I've got Tim on board, which is great news. I've got some Innovate grant funding and great support from QUBIS. Where do you then come in and get involved?
Yeah, so that's really it. I mean, as Tim outlined, there's 4 angels in there. 3 are probably not sectoral experts, and Tim really is. And I suppose in many respects, whether you want to be an active angel investor or a more passive angel investor, really it's up to you. But really having Tim in there and writing his own check really validates an investment from our perspective. As I said, we're a co-investment fund, so we require that private investor match that de-risks and validates our investment, and then we can go off and do our financial DD, our legal DD, alongside the technical DD, which Tim and other specialists are able to do themselves. So again, it's just that sort of collaborative nature of investment here. We've got all these different arms and different types of investor all coming together to support early stage companies, buying them time to go off and really establish value and grow.
Christina, I've got 2 questions for you, if I may. First of all, it would be good to get that kind of elevator pitch about what the business does and kind of the regenerative medicine side of things. It'd be really interesting because I'm pretty sure it's very interesting from a societal perspective, but also it'd be good to understand about the grant process. What is that like and how has that been for you? Because that's another key source of funding for early stage businesses.
Okay, so maybe if I firstly describe the grant process. So it was actually quite straightforward. The questions on the Innovate UK grant, I believe, are similar throughout lots of the other ones. So this was the follow-on funding specifically from the iCure. We had no experience as an academic group for writing and taking part in an Innovate UK competition, so it was brand new for us. And I guess there wasn't that expertise within the university, but we really reached out to lots and lots of different people, including QUBIS and others, to get advice, because each of those questions are scored, and you need to have a certain pass mark on each of them to get to the next stage. But for us, applying to Innovate UK was absolutely, there was no question around that, because we knew it was non-dilutive. First of all, that would be fantastic for us as a company. Second of all, we knew that, it was essentially reviewed by the UK government, so it would be reviewed at a level and we would get important feedback on that. And we knew that if we got through that stage, that should potentially de-risk, as Stuart has mentioned, because it has gone through that kind of peer review process. And even in the end, if we hadn't have been successful, these applications are reviewed by 4 or 5 assessors. So the feedback is essential really for us to really assess, what can we do better, and to take action on that, and then develop our business in a better way. So it's all really a win-win process by applying for this funding, and we were delighted to get it.
And it's not one-off, is it? I mean, they are constantly monitoring and seeing the way that you're spending the money as part of the project. Yes,
so you always need a little bit of money to start off with, because the Innovate UK money is claimed back every 3 months essentially. So you do need a pot of money to begin with. every 3 months you have a monitoring officer that you work with, and you basically report on a 3-monthly basis to them. And again, the finances are very, very carefully controlled within the subcategories, but it is essentially monitored very, very carefully within the year project.
And then give us the pitch. Give us a pitch. A room of interesting, exciting individuals here. So, Tim might need to write another check as well at some point. So let's keep Tim warm. We're going to keep Tim warm.
Yeah, absolutely.
So our company is essentially a regenerative medicine company, and our product is called AngieSite. So AngieSite essentially is the building blocks of blood vessels. So it creates new blood vessels. So a lot of diseases out there that suffer from lack of blood vessels, and all healing requires a blood supply. So essentially what we have is a product that could be applied to lots of different vascular diseases. But one of the things that during the iCure journey that we really focused on was the wound healing sector. So diabetes is a terrible disease. It's on the rise year on year. And we know that diabetics suffer very poorly from poor healing. They simply just don't, the diabetic environment pretty much really challenges their whole body system, but poor healing is a major effect. And that's a result of poor circulation, poor blood supply really. So our therapy creates new blood vessels to restore healing and repair that tissue.
Fantastic. So that can make a big difference to many millions of lives every single year. Thank you for that, Christina. And I can see, Tim, why you got involved as well. I mean, I'm excited as well. That's a really interesting, highly complex business. And to get to where you are now, you've had that early kind of support as well. It'd be great to hear more from QUBIS actually about the other kind of technologies, infrastructure that you're seeing coming out from Queen's specifically, and what are some of the challenges that you see when you're working with these businesses? Yeah,
so we would see like right across the spectrum of sectors, and Queen's at the minute is really specialising in life sciences and particularly in drug discovery and precision medicine, and there's some AI and the online analytics that is in that space as well. We have Ravana Therapeutics, which is a drug delivery. So it's in for oncology, so to help deliver medicines into the eye. So it's a really exciting technology that's doing really well. So it's really across that spectrum. And I suppose the challenges that we then find is finding angel investors with that understand them businesses and understand life sciences businesses have a very particular lifespan, and Stuart where this where it could be you're looking at 10 years before you're even selling a product, and that can be a very, and potentially having to raise 50, 100, 200 million pounds, and that can be a very daunting prospect for an angel investor to come into. And when you're maybe more used to traditional businesses that is trying to reach profitability quickly, where it's a completely different model, and I suppose it's trying to get people who are comfortable with that. And typically, as in the case of VascVersa there, it's more guys who've been through that before and can explain to other investors, this is how this process is going to work, this is how dilution is going to work when other investors come on board. But there is still there's an exit event possible in the future, and it's really seeing that full pathway. And so really I would say that's our biggest challenge, of finding sector specific angels. And
you can add that value like Tim clearly has as well. I'll get to you in a second, Tim. And I guess how many businesses are coming out through your process every single year? And I'm guessing that's growing as well.
Yes, so we would have the before the 5 spin-outs coming out every year, and I suppose also university will be putting out a few as well. So that's within Northern Ireland, and then in the iCure program itself, it's maybe 15 to 20 coming out, and that's across the UK. So I suppose in Northern Ireland, you're looking at 6, 7, 8 spin-outs a year coming out. And I would imagine most of them will be going through Clarendon and Stuart. So you'll get full access there. If you're working with them guys, you'll get, I suppose, access to that. And the other thing I'll just sort of mention quickly is that in response to that sort of issue with the angel investors in the sector now, we've set up the QUBIS Innovation Fund, which I know we'll mention a wee bit later. And so it's essentially an SAS fund that will invest across nearly all of the opportunities. So instead of having to have the sector knowledge to go into each one, so that's been set up to sort of address that, and we're working closely with Clarendon in delivering that.
Fantastic. We'll dive in a bit more on that as well shortly. Just actually to reminder to the audience out there, if you have any questions, we've got a fantastic set of panelists here. You can feel free to post any questions you may have in the Q&A section at the bottom on Zoom, and I'll happily pick them up and post them. I'll keep an eye on it and pose them to our panelists to answer as well. And feel free, if they're tough questions, the tougher the better. Let's keep them on their toes. So feel free to use that. Tim, I mean, you've clearly given quite a lot of support to Christina. Is that that something that was that an important part of your investment decision, that you could really add value to it as well as have a piece of their potential future success?
Yeah, no, absolutely. I think you know, being a sort of, I guess, sector specialist, I have a passion actually about seeing young companies get founded with this particular type of technology and grow. And you know, and I think it's already been mentioned, but the aspect of developing these novel therapies, you know, they're not going to be products tomorrow actually. So I think there has to be that understanding that, you know, investors in these companies, they have to be patient, and they have to expect actually that it will be, you know, maybe 8 to 10 years further down the line before they can actually get some significant return in value actually from their initial investment. Because when those events do happen, there are significant opportunities. So in terms of the sector, there's some massive transaction ticket prices going on at the moment in terms of the kind of general technology space that VascVersa and Christina is working in. You know, and I think also, as has already been mentioned, there are a couple of other ingredients that really, you know, I viewed as attractive that sort of triggered me to actually become an investor. So one is that this is a Queen's University Belfast spin-out company, and Queen's is, you know, a top-notch UK university, and actually in terms of global context is punching way above its weight, I would say, in terms of spin-outs actually and translating its scientific discoveries. The second one, of course, is critically, as has been mentioned, that this was already an approach, a technology that had been public sector peer reviewed as part of the Innovate UK grant process, and that was a significant factor for me, because I already knew actually that others had scrutinized it, poured all over it, and seen it as a potential successful winner. And I think that is also a very important factor for angel investors who are posed with the opportunity to actually invest in seed stage companies, to consider that, you know, independent third-party review, if you like, or assessment of what the opportunity is, in a way, is a very significant factor. And then I guess another key aspect is the fact that, you know, Christina is a young female entrepreneur, and I think this is a sector, these are types of people who should be very actively encouraged and supported in terms of helping them to realize their aspirations and ambitions. So I think at the organizational level, at the technical level, and also down to the individual in Christina, you know, for me, it was a no-brainer, as they say. It was a significant opportunity that I couldn't overlook.
No, that's really interesting, and I guess that some of it was de-risked as well. You mentioned about Innovate UK, but also the tax breaks are pretty helpful as well in that regard.
Does help. It does help, yeah.
But it's always great businesses first, fantastic potential for returns, and then tax breaks are the absolute sweetener as well. I think that's really interesting. Yeah. Stuart, we've got some questions coming in. That's great. Something in the chat as well. I'll have a look at that in a minute. Stuart, you've got, you know, you guys, you're operating the Angel Group. You're also running the co-fund, and you have a number of funds actually under management as well. There's a lot of, you know, advisors, I guess, on the call who have a lot of founders respectively. What's the process for approaching you and saying, hey, we need some funding? What sort of things are you looking for? What do you look for in a business? What sort of stage, what sort of traction do you want to see? And what sort of amounts of money do you tend to invest?
Yeah, so I mean, really, we invest at any stage. A lot of our investments, I suppose, the nature of high growth companies, are that they are early in the sense of VascVersa, but we also invest in mature businesses. I think one of our businesses we invested in is a packaging business going back 130, 140 years when it was started. So really, being a co-investment fund, again, it is needing that private match, the likes of Tim, the likes of QUBIS, the likes of other investors, whether they're corporates or other funds. So anywhere there is an investment happening, we can potentially get involved, as long as it's based in Northern Ireland and there is a high growth opportunity. And just, I suppose you mentioned co-fund and HBAN there, there really is they really bounce off each other very well and work together. And maybe I should say that in the instance of VascVersa, although co-fund was interested in making an investment because QUBIS was there, because Tim was there, we were also able to introduce other private investors. So the 3 other private investors which have also invested, we were able to introduce them through our HBAN network. So VC is very collaborative, and we want to make those links, build those relationships, and allow companies like VascVersa and others to get their investment rounds through. I mean, in terms of sort of where we go in terms of quantum, our initial check size, Rod, can be anywhere from maybe 150,000 right up to $500,000, but it really is dictated by who are the other investors. We really want to see those sectoral experts, guys who have been through the pains maybe of setting up their own business, growing their own business, exiting their own businesses, and we want to see those guys come back in after making a few quid and go, listen, we want to make some smart bets here. You know, again, whether it's 20k they want to put in, whether it's 100, 200, 250, whatever it is, we want to support that private investor, lighten their load, and bring our experience and expertise to the deal. And you know, through co-fund, we've a portfolio, I think, of 84 companies, all in varying states of growth. Some, like VascVersa, we've only recently invested in. Others are maybe going 5, 10, 15 years. And I suppose the nature of our money is that it is very patient. It's supported by Invest Northern Ireland. It's supported by British Business Investments. And we're there for the long haul to support, bring our experience to the board as an observer, and really help the companies along their sort of growth journey.
And that's a really, exciting kind of support infrastructure. Great funding, great support, good introductions as well. What are your challenges? I mean, what are the kind of the key choke points that you think we could do more if only we had X? What are you seeing, Stuart?
Yeah, well, I suppose Tim mentioned female-led companies, and obviously VascVersa is a good example with Christina. You know, we have, I think, the last 14 investments that we have done, we have seen 7 of those have been led by female founders or female CEOs, which is great. Now, one thing that we really do struggle in, however, is female investors. And we want to really encourage female, you know, exited entrepreneurs, high net worth individuals to really come back in and support other investors. You know, and I suppose, you know, more broadly, we just need more investors. We need guys coming back in like Tim to support these companies that we can come alongside, bring our money and our expertise to the party as well. So yeah, it's really expertise, guys willing to roll up their sleeves and get involved, that sectoral expertise and allowing us to come to the table to support these companies.
Thank you. We've got a question coming. It's a very good question. It's a question that I'm sure will be answered for many, many years to come, as it has in the past as well. And this is based around valuation. The question is, so what's the best way to set and manage the pre-money valuation expectations of these technology opportunities? So it's not necessarily how to necessarily value it, but setting their expectations. Really interesting point. I'm seeing these valuation expectations increase significantly over the past 12 to 18 months without any real rhyme or reason. Does anyone have any views around that kind of early stage expectation? I've got my views, but I would love to hear from the panelists. Let's start early on. Maybe go on, Stuart.
Sorry, Tim. I'm happy to give
go ahead.
A high level explainer. Certainly the way I think of it. I mean, companies, we think of it in terms of milestones and de-risking. So the more de-risked you are, the higher valuation you can achieve. The more milestones you have gone through and achieved, again, the higher valuation. So if you're a concept company, a company with a concept, you're going to get a certain valuation. If you're a company with a concept and also develop a product, well, you're going to get a slightly higher valuation. If you've got a product, you've maybe got some early stage customers or early stage revenues, again, you're going to have a higher valuation. And then once you get beyond those early stage revenues and early stage customers, and you get that critical mass and that repeatability and that repeated revenue, well, then all of a sudden you're at that next stage of value. So, you know, how long's a piece of string? It's really what you can negotiate. I suppose we have the we can hide behind our private investors in many ways, because we take pari passu terms alongside what alongside what they can negotiate. So if only Tim had negotiated a better deal,
it's up to you now, Tim. What's your methodology, Tim?
He's to blame.
I'm to blame. Oh, thank you very much. Yeah, Stuart, you and I should speak after. No, I think you know, my way of looking at this. I mean, clearly the question is in two parts. I'll deal with the increased significantly over the last 18 months or so second. But initially, you know, my view is there's no real general rule for actually setting initial pre-money valuations. And of course, I having worked prior to VascVersa and even now since working with VascVersa with a number of other companies which are very equivalent stage to VascVersa, you know, I would say actually that what we initially set down in terms of the business plan for expectations or descriptions, if you like, of the valuation of the company at various stages in development, coupled importantly to what Stuart was just saying about reaching key milestones, I think is about par actually. So I think, you know, the way that VascVersa is poised to grow and its value increase is pretty much representative, I would say, for this technology in the biotech sector. And I mean, what I would say is that, you know, the company is focused on developing medicinal products. So these are going into a highly regulated market. And so it's critical actually that the valuation realistically grows alongside the company meeting those milestones. One important one of which will be being able to get regulatory approval to do the clinical evaluation that will be required, for example. Now, in terms of value expectations increasing, so I'm not surprised by this, because I think, again, in terms of the type of sector that VascVersa is working in, there have been some massive increases in valuation of company which actually aren't even public. They're not even out there. So you can't find out very much about them. They're in stealth mode. And it's just the nature of the appetite of the global investment industry, particularly driven by what's going on in the US and other markets. But, you know, the valuations of these companies who have probably, you know, they're maybe more developed, they have a bigger FTE component, but they also have, you know, maybe only equivalent levels of intellectual property. So their asset base, you know, is not, you know, vast and, you know, would be set against these high valuations. But it just seems as though there's a great deal of, you know, hyper valuation that is going on in the biotech sector now. And of course, at the one level, that's very positive, right? Because that drives innovation. It sucks through innovation from the discovery base. It also fuels, you know, a lot of further industry sector growth. But then, of course, you know, the potential downside, let's hope that it doesn't happen, is that there's some kind of, you know, bust and the bubble bursts and all that kind of stuff, right? I don't think it'll happen like that actually, because there have been some striking market approvals for products, again, in the related industry that VascVersa is working in, that I think no one would have expected probably about 8 years ago or so. And I think this is really, you know, put rocket fuel into the whole sector. And that's of significant advantage to VascVersa, because VascVersa, small and nimble, can ride the crest of that tsunami wave, I would say. So I think the future is very bright for VascVersa.
Great to hear Christina's view in a second, but also I guess just touching a little bit on that point as well around why is it increasing. Do we think it could be an increasing in drive from the founders fundamentally, because there's a really crucial part, which is ensuring a decent equity stake for the founding team. And if they want to go global, they know they're going to do a lot of big raises in the future, and they've got to retain as much equity earlier on as they can. And that can drive up these early stage valuations. Does anyone see this kind of, has there been that kind of fundamental shift or increase in aspirations from founders that we're seeing?
I think, yeah, actually, and not always are they realistic, but, you know, there has been that increase in aspiration.
But that's what investors do, right? They try and bring them back down to earth a little bit to keep.
That's right.
Christina, what are your views around that valuation discussion as well? It'd be good to, obviously, it's your business. I mean, tell me, what are your thoughts?
Yeah, no, I think, as Tim suggested, there's huge growth in this area. And, you know, cell and gene therapies, especially, there's been a lot of progression of these companies recently in the news. You hear a lot about even the recent CAR T therapy successes. So I think all in all, it has really boosted the sector. In terms of our valuation, our pre-valuation, that was a that was a significant discussion between QUBIS and ourselves and Tim. So we were really, you know, we had no experience as academics how to value such a company, but with their expertise and their guidance, that's really where we kind of found our value and settled on a figure for that. So yeah,
it's a balancing act, isn't it? Really, you want to make sure the founder retains good equity all the way through, so that they stay incentivized to work those sleepless nights, and investors, obviously, they want to make sure they can get a reasonable return at given the high risk as well. So that's really good to see. That's really good to hear. Let's talk a bit about the future and new things that have come out. We've heard a little bit about QUBIS's new fund. We'd like to hear a bit more about that as well, and a bit more maybe from Stuart. You guys have successfully secured the £10 million from BBI, which is really exciting, for the Regional Angels Programme. Stuart, do you want to chat through a little bit about the Regional Angels Programme?
Yeah, so our originally co-fund was a £31 million fund, Rod, and I suppose we've seen really an investment uptick over the last sort of year, 18 months. You know, I think we've done, over the last 12 months, we've done, I think, £4.7 million worth of investments into some of our companies. And that's obviously been leveraged up with private match and other investment that we've been able to bring in as well. So I suppose we had spent our £31 million a little bit quicker than we had initially anticipated. So we had to go back to Invest Northern Ireland for some additional money. So they were able to give us another 6. And we also reached out to British Business Investments, who were able to bring in another 10. And as you say, that's part of their Regional Angel Programme. I suppose the background to that really is, you know, if you're in London or Leeds or some of these large cities in England, where sort of the availability of investment is easy to access, areas like Northern Ireland, the Northeast, the Northwest, maybe Scotland and Wales, it is slightly more challenged. So again, BBI wanted to push that money in so that they could support early stage companies, and also you know, support those private investors who are in the market as well.
Fantastic. So the writing's really there on the wall to say there's more funding coming into this region, because they're seeing some fantastic businesses coming out from Northern Ireland. And Oisin, I guess chat me through QUBIS and about the fund there, because you've also seen the same.
Yeah, and I suppose we looked at it and identified that there is a vacuum in Northern Ireland for private funds based here. Because that there isn't really none, I suppose, pre-QUBIS Innovation Fund, and that's why we sort of set out to set this up. We're okay, passionate that we would be able to fund this in Northern Ireland, and the angels in Northern Ireland would back this, and thankfully that was the case. I think over 60% of the fund came from Northern Ireland investors, and so that's set up now. And I suppose it's an alternative to, I suppose, what we're talking about here in terms of angel investing and bringing that expertise. It's an opportunity there to, I suppose, as I say, spread your bets a bit, but also get access into the easier access into the sort of opportunities coming out of the likes of Queens. We also, me and Stuart speak about this quite a bit, look at geography within Northern Ireland, about the likes of west of the Ban, that there's a large untapped market there for angels. And I suppose that's why when raising this fund, I concentrated a bit over there and did see an appetite for investing in them sort of areas. Being from there myself, I kind of know that that's there. So I think that's an opportunity within Northern Ireland to sort of target into them sort of geographical areas within the region as well, to look to grow this space.
Fantastic. Christina, I guess we're coming towards the end of our discussion. We're heading up to time. Christina, you know, given that you're making a huge difference to people suffering from diabetes in the future, and we'll be making some great strides within that technology in that space, and also that you're operating locally and hiring locally and spending locally, could you have done what you are doing without the external funding support you have received from the 3 other panelists here today?
No, absolutely. I mean, it's been incredibly difficult for us to translate everything. The Innovate UK funding surely was fantastic, but without the angels support, without QUBIS support, without co-funding, we wouldn't be able to get to where we are today. And particularly, you know, Tim was really, really beneficial in our kind of early translation, because he really gave us a lot of support. So Tim, as he said before, was initially our chairman and business advisor, and helped a lot with our business support. Coming from the sectoral background he comes from, he brings a lot of expertise. So that really helped us as a company then format our business plan, which then we went to co-fund and and showed the angels, and with the support of QUBIS, it was a whole package really, you know, but yeah, we couldn't have done it without everyone on board, and I'm hugely thankful for all of you. So thank you very much.
Amazing. Well, that's a great closing message. So thank you so much, Christina. And that's all we got time for now. I'm afraid we are going to move on to here, but before we do, on behalf of all the audience, because obviously it's online, we're not face to face, you don't get a round of applause. You get a round of applause from me, but on behalf of everyone, thank you so much for joining this panel and being part of this event today. So thank you so much, everyone.
Absolute pleasure.
Really good.
Thank you.
Thank you.
I look forward to it. And feel free to reach out to these panelists individually if you want to follow up a discussion as well. So look, I want to move on now. We're going to move on to our next speaker, which is, he's joining us now. Thank you. Hi, Mark Brownridge from the EIS Association. I've referenced EIS and I've kept my references as loose as possible to date to save it up for the big discussion from you, Mark. So look, over to you.
Yeah, you're driving on my alleyway, Rod. You're trying to get in early on EIS and SEIS, which is good to hear. But thank you very much, Rod. Thanks very much for everyone today. I'll just share my screen to get my slides up and running. But while I do that, I'll do a quick introduction. So yeah, my name is Mark Brownridge. I'm Director General of the Enterprise Investment Scheme Association. We are the industry body for the EIS and the SEIS industry, and we do two things primarily. One is to work with government and Treasury and HMRC and all the fund people to look at legislation of the scheme and how it works and how it operates. And secondly, we do things like this. So we do events and general awareness around the schemes to make sure companies know what it is, make sure investors know what it is, and make sure everyone in between those two things knows what EIS is and how it runs. So I think I've got 15 minutes, so I'm going to give you a kind of whirlwind tour through EIS and SEIS and what it is and how it works. We'll look at, generally what it is first to begin with. I'm not quite sure of your general knowledge of EIS, so I'll start with the basics and cover that off. And then we'll move on to look at the companies and how the companies can use EIS funding within their business. And then we'll move on to investors and see how investors can invest in the scheme and the best way of going about doing that. So that's pretty much your next 15 minutes. But I always start with the slide I like to use quite often. That EIS shouldn't stand for Enterprise Investment Scheme, it should stand for these three things, which is economy, investors, and start and scale ups, because these are the three main stakeholders that EIS benefits. So the economies in terms of the significant contribution that EIS makes to the UK economy. You know, we're standing here today, we're trying to get to the petrol station to get petrol. Tankers can't get in. We haven't got enough lorry drivers. All those different things, mainly caused by Brexit and various other things, COVID as well, etc., etc. You know, it's pretty clear and obvious that going forward, we're going to need startups and scale-up companies to really drive through our growth, to go on to become big companies, to become big employers, and to become big participants in revenue for the UK over the next few years. So EIS has done a great job over its 27-year history of doing that, and we hope it very much continues to do so. The I for investors, again, super important investors. We'll talk a lot today about angel investors, really important to the ecosystem, the funding ecosystems. Effectively, it's a sausage factory. If we don't have enough money coming in, we can't fund those companies that I'm going to talk about in a minute as well. So investors are super important. We estimate there's about 32,000 investors in EIS every year. But there's about 500,000 high net worth people in the UK. So there's a lot of headroom for EIS. We feel like this is still a little bit of a well-kept secret for investors. And we're very keen to raise the voice of EIS and how it can work for investors. And angel investors, Rod will probably correct me in a second or so, but I think 87% of all angel investment is done through EIS. So it's super important for angel investors at the same time. And then finally, and probably most importantly, is startups and scale-ups. It's what it's all about. Trying to fund these great companies, going to get that first amount of money. SEIS in particular, obviously, is the first amount of money into a company. We're talking about SEIS a little bit more and how that works in the tax release, but really important to get good ideas, to get innovations, not just on a piece of paper or the back of a fag packet, but to get them into a company and to get those companies started and starting to scale up. And I say, go on to be those unicorns, those big companies of the future. These are the next generation of big companies and we need to look after them and care for them. So yeah, let's say EIS should really stand for those three things: economy, investors, and startups and scale-ups. Just want to run through EIS in some numbers. I just kind of throw some numbers up on the screen that hopefully bring some context to all of this. As a starting point, EIS is a government-backed, tax-incentivized investment scheme, facilitating the smooth flow of capital from private investors on one side the small early stage companies on the other side. And let's say it's been going for 27 years now, since 1994. And in fact, there we go, there's our first number. It goes since 1994. 2012 is an important figure because that's when SEIS came in. So SEIS is EIS's little brother or little sister. As I say, that's really helping very early stage companies, the first £150,000 into a company. So that came in 2012. 1.9 billion, sorry, and 179 million. So 1.9 billion is the amount of EIS investment raised in the last tax years, is 2019-20 for EIS, 179 million for SEIS. So it's a pretty big numbers, pretty significant numbers for equity funding in companies. 24 billion, 30,965. What's all that about? So 24 billion is the number that the amount of investment that's gone into EIS since 1994. So again, some significant numbers here. This isn't small fry numbers, it's pretty decent sized figures. And 32,965 is the number of companies that have had EIS investment in that time. So again, these are companies, Christina's talked about it earlier on already, these are companies that without this funding may not have get started, might not have been able to get up off the ground. So it's a really important part of the funding ecosystem. 30%, 50%, so you probably recognise those numbers in relation to EIS and SEIS. 30% is the amount of income tax relief with EIS. 5 tax reliefs are noted with EIS. We'll go through them in a second or two, but that's probably the most important one from an investor point of view. And 50% is a slightly higher tax relief, income tax relief for SEIS investors to recognise that you're taking a little bit more risk because you're investing at an earlier stage. 25 out of 100, just trying to edge my memory to what that means. Yes, it's come back. So there's 100 out of every 100 investments made in EIS, 45 are made in what HMRC classify as information and communications, what we probably better known as tech. Tech's a very big sector at the moment. Everything's tech these days: fintech, medtech, agri-tech, reg-tech. If you put tech on the back of it, you can raise money. So it's really important as a sector going forward. When we speak to government about the scheme and how it works and operates, where they want EIS and SEIS monies go is into 3 areas mainly. It's growth, it's innovation, and it's technology. So that's why technology is so super important these days. £50,000 or less, so the average investment into EIS is around the £50,000 mark. That's starting to creep down. We started to see obviously the crowdfunding sites come along where you can invest as little as £100 in EIS and SEIS, so that's starting to drop the average figure down slightly. But yeah, I think Rod made the point earlier that the average angel investment is around 10, 15,000, and that's pretty much backed up by this figure here of around 50,000. Finally, 2%, so this is the one relative to you guys in Northern Ireland. So this is the amount of EIS investment raised in Northern Ireland. It's just 2% of the total amount raised in EIS. So guys, come on, there's a lot of work to do for you guys to get up and running in EIS. And perhaps that's part of what I talked about earlier about EIS being a bit of a well-kept secret. We need to do more to try and help companies and help investors to understand how they can take advantage of the schemes. The slides are, sorry, this graph even is just going back to the figures I talked about earlier, looking at that £24 billion that's been raised over the last 27 years in EIS. This kind of charts the growth of that money. You see, it's pretty much been an upward kind of spiral. You see there in, where are we, 2000, I think, tax relief changed from 20 to 30%. So the numbers could drop back slightly, but ever since kind of 2010, it's been a steady rise upwards, and that rise pretty much continues. Last year was a high watermark. Be interested to see what the figures are going to be for the COVID year for 2020. I suspect they're down slightly, but already this year we're starting to see numbers track back up. So it's a pretty healthy environment for early stage investment at the moment, I think. I said I'd talk about companies. So I mentioned earlier that the I should stand for investors and the S for startups and scale-ups. So if we look at the startups and scale-ups at the moment, so I'm not going to go through this slide in its totality. But you can see here how companies can be eligible for EIS investment. And I think one of the points to note here is really that these aren't necessarily particularly small companies. Our company with 249 employees and say £14 million in gross assets is a decent sized company. So if you're looking to invest in EIS companies, there's some decent sized companies to invest in. They're not necessarily all startups. And same for company, you don't have to be a particularly small player to get to qualify for EIS funding. As long as you're hitting some of these criteria, you should be good. As I say, these are available on the slides. I know the slides are being made available to you afterwards, so I won't go through them all here and now because it probably take far too long. BDIS, so this is for your proper startup. So this is the first 150,000 into a company. As you can see there, you've got to be less than 2 years old, less than 25 employees, unquoted. So literally, if you have an idea for a company, you want to get it going, you're not quite sure if it's going to float or not, then SEIS is ideal for just getting a company off the ground, getting it moving, getting your MVP going, and seeing if the company will work. And then you use EIS funding to grow and scale up the company from there on in. So that's why SEIS is a great way of getting your company actually off the ground. These are some of the companies here, kind of sort of well-known names that you might recognise who have used EIS or SEIS funding. So we've got Gusto there. Basically, it's food or drink on this page, but so we've got Gusto, we've got Cobra, we've got Brewdog, Not on the High Street, Eve Sleep, who do the mattresses. There's a few tech companies as well that probably isn't on that screen. That should be. I was doing a presentation yesterday, a company called Onfido, just raised £200 million over in the States, do some great work in AI. And there's some other big tech companies, Skyscanner, for example, took EIS funding. Grays took funding recently from EIS, or a few years ago in EIS. So we're starting to see some of these companies really come through. This is a great time to invest at the moment, particularly on the back of Brexit, on the back of that pandemic. To change the whole ecosystem of companies. There's a lot of disruptors out there. We've seen it in banking with Monzo and Starling come in. We've seen it in the car industry with people like Kazoo and Cinch come in at the same time. There's no reason why a startup, why a scale-up company can't come in and disrupt a fairly major industry. So we're starting to see that, as I say, on the back of the pandemic. So a good time for investors to be looking at these type of investors, I think. Why do companies take EIS funding? So the figures here really. So we all know working capital, cash flow is king in any small company. So companies take EIS funding to help with their cash flow. Absolutely makes sense. Big one for EIS there is developing or launching a new product. Again, EIS gives you that chance, that development opportunity to launch something new into the market, test the water, see if it works. If it does, great, fantastic. You can take on more funding and really scale it out. But without that EIS funding, you might not have the opportunity to do that. So these are the reasons why companies take EIS funding in the first place. Oh, let's go back a little bit. Moving on to the investors, we talked about that 30,000 investors who are investing in EIS at the moment. There's still a lot of headroom to increase that. So here's some of the reasons why we think investors might want to invest through EIS. High levels of personal taxation that we've seen over the last few years with Conservative government, that higher rate taxpayers are being hit more and more for tax. I think there's some ridiculous stats that say something like 80% of all the tax taken is taken from about 5% of the people in the UK. So it's pretty obvious that where the government's heading with taxation, it wants to tax the rich and the wealthy more than it does further down the line. So any way you can mitigate tax release has got to be a good thing for people paying high levels of tax at the moment. Changes to the pensions limits. I used to be a financial advisor, so I remember 5, 6, 7, 8 years ago when you could put £200,000 into your pension every year. That's come right down to 40,000, even 10,000 for some people. So you can't put as much into a pension as you used to. Obviously, that's a great tax saving vehicle. Obviously, there's limits on ISAs, which is around £20,000 mark. So it's pretty easy for a high net worth investor to hit those limits quite quickly. So EIS, SEIS, VCT even are good ways to investing in small companies and also getting some tax relief at the same time. Target avoidance, anti-avoidance and tax schemes. We've heard a lot about tax avoidance and tax evasion schemes and some of the Ponzi schemes and other schemes that celebrities have been involved with over the years. EIS, SEIS, the antithesis of a tax scheme. They are government-backed, as I said earlier. Every company who wants to qualify for EIS has to go through a system called advanced assurance, whereby HMRC check your business plan, check you're a bona fide company, and give you a golden ticket to go and raise money in terms of advanced assurance. So you as an investor have that assurance that that company is a bona fide company and will still be here in a few years' time, all being well in the company itself, obviously. And finally, there's strong investment returns. So yeah, a no-brainer really in terms of investments. We talked about tax reliefs. Tax reliefs are great, but the company's going to go bust. That's when your tax relief kicks in. But there's some great investment stories out there. We've heard from Christina tell us about her company. We looked at the companies earlier in terms of Gusto and those guys and girls. There's a report done a couple of years ago looking at an investment of £100 in early stage equities that was made in 2011, but now you're worth £450. So you can see there's some really exciting returns in this industry. Tends to be boom or bust. We always say have a diversified portfolio, 10, 12 companies. Out of those, 4 or 5 will probably go bust. 4 or 5 will probably go middle ground, do okay. But it's those 2 or 3 that go super stellar, and that's what get you returns as an investor. And they'll be the big ones in your portfolio. Then the tax reliefs, EIS tax reliefs there. So there's 5 tax reliefs, one of the most tax advantage schemes in the world. So we've got a 30% income tax there, 2 forms of capital gains tax, IHT relief and loss relief. Again, I won't go through these individually because it will take far too long, but they'll be in the slides when they're sent out to you as well. Same for SEIS, very similar tax reliefs, the uptick in income tax relief up to 50%. And then we've got slightly different capital gains arrangement and the IHT and the loss relief again. But again, these slides will be available to you to have a look through at your own leisure. And then final slides, potential investors in EIS who actually invest in this stuff. So we've got obviously professional funds and managers, portfolios. So we as ESA have 60 managers who are all raising funds at any one time. They're raising funds from investors and have a pipeline, a deal flow of companies that they want to invest into at the same time. So they're always looking for investors, obviously, and they're always looking for new companies to invest into, and they'll do that on a professional basis, and it can invest in investors' money on their behalf. Crowdfunding platforms, I said earlier, have grown over the last few years. So we're starting to see those really kick in. I say you can invest from £100. You've got Seeders, we've got Crowdcube. And again, I think 90% of all investments on those platforms are EIS or SEIS qualifying. So it can be a good source of investments, particularly single company investments, if you want to choose your own SEIS and SEIS investments. Buyer beware here, some crowdfunding platforms, there's the good, the bad, and the ugly out there, so do your research before you do your investments. And then finally, neat segue into the next section, angel investors. Obviously, we talked a lot about angel investors today, high net worth individuals. Again, there's about 500,000 people in the UK we think could be qualifying, could be eligible, or could have the risk appetite, more importantly, to invest in SEIS and EIS. So it's really up to us to try and spread the word about EIS and SEIS and how it works. But yeah, as I say, angel investors neatly next segues into our next section. So I'll pass you back over to Rod.
No, thanks, Mark. It's been really good. So I really appreciate that. And you can see some of the benefits, and Mark's going to share it. But Tim, for instance, when he made his investment, could get 50%. He invests in that business, he gets half of that back against his income tax and won't pay capital gains tax if that company is successful as well. So some really exciting gains for investors, isn't that right, Mark? But look, thank you for that. Really appreciate it. Up next, as I mentioned, we've got another panel discussion full of exciting angels, all talking about the angel ecosystem in Northern Ireland and the do's, the don'ts, and how it works and how to get into it. And it's being moderated by my colleague, Jenny Tooth, OBE. So Jenny, do you want to turn on your camera and I'll hand over to you, Jenny.
Thank you, and thanks very much, Rod, and also to Mark for that great intro. So I'm Jenny Tooth. I'm the CEO of UK Business Angels Association, and I have the absolute perfect privilege to be talking to some really fantastic people today. I actually think one of my panelists maybe hopefully just joining us shortly, but just to kind of set the scene, I really just wanted to just remind you, obviously you'd heard from Rod this morning about the importance. Here he is, here's my other colleague Michael, who joined us too. So you really heard this morning, hopefully the first part of the presentation that Rod did when he really set the scene about the angel market and how important it is. And in the second panel, you heard about some of the fantastic investments that investors are making, and great to hear from Tim, who is also a great angel investor, but also meeting entrepreneurs who generally attracted angel investment. And so this is really a chance for you to, and for me to dig a little bit deeper into the whole world of angel investing, and I'm going to do that with the help of really 3 fantastic people. We have with us today Mary Mckenna. I'm sure that many of you may know Mary. I know Mary by reputation as well, and she's a fantastic tech entrepreneur, a fantastic example of a woman investor. You know, we'll talk more about that shortly, and more importantly, someone who's really putting things back and supporting some really important initiatives here in Northern Ireland. So I'm really delighted to have Mary join us. We've also got Michael Harding, and I met Michael for the first time recently, but he's a really active angel investor here in Northern Ireland, also member of HBAM, but someone who is a real great example of an active angel and is really putting back here into the Northern Irish economy, really drawing on his business experience and skills. So really great to have you here, Michael, too. And we have John Phelan. Many of you may know John. John is actually all Ireland managing director for HBAM. So both for the south and the north, which is absolutely fantastic. And you've also already heard from Stuart from this morning, Clarendon Ventures, and here is great to have John here, who really give you all the lowdown about how HBAM works and the opportunities for you to bring high net worths towards the angel investing community here. So lovely to have you, John. I want to make a final point, because many of you may have also seen that we had Michael Black as one of our speakers on the agenda today, another very active angel investor here in Northern Ireland. And Michael, unfortunately, has had some personal problems and can't join us today, but he'll be with us in spirit, I'm sure. So really, really delighted to have my panelists here. And I'm going to start from the point of view of just setting the scene a bit about who these angels are and their backgrounds and really how they got into angel investing. Because I think once you understand the stories of angel investing, it helps you to identify the kinds of people in your own client base and your own communities who you could be helping to take on this role, this really important role. So over to you, Mary. We seem to have a kind of a funny screen in front of us. I'm sure somebody's going to fix that shortly. Perhaps someone's still slide sharing, I'm not sure. But Mary, just over to you. Oh, this is exciting. Hey, here we go. Here we go. Right. So I'm just going to turn to you, Mary, first of all, if you wouldn't mind telling me a little bit about how you got into angel investing as a tech entrepreneur, someone very active here. Give us just a quick overview of your story and why angel investing has been such a great opportunity for you.
Good morning, everyone. Nice to see you, Jenny. Nice to see you, colleagues. So my name is Mary Mckenna. And as Jenny mentioned, I'm an exited technology entrepreneur. So I started a business here in Northern Ireland in Derry called Learning Pool. And I sold my stake in that business about 7 years ago. And I pretty much started investing immediately after I had exited. I'd always been interested in angel investments when I was a founder. But when I was a founder, I didn't really have any money at all because everything was invested in the business. So I used to watch what was happening in the investment community, but I didn't participate because I didn't have the funds at the time. But as soon as I had exited and made a bit of cash, that was the very first thing that I did with some of it, was to start investing in companies straight away. So I've been doing this now for about 6 years, I suppose, Jenny. Do it for a whole variety of reasons that I think we'll probably come back to a bit later in this talk. But I do it mostly because I really enjoy it. It's a great way of giving back, and it's a great way of being involved in some early stage companies without having the full-time commitment of going again with another startup yourself. So that's mine in a nutshell. Thank you.
Yeah, thank you, Mary. And again, that great example of an exited entrepreneur. We often see that a bit as the kind of Silicon Valley effect. We always used to say that's how it happened in the US, that, tech entrepreneurs exit, start investing. We haven't seen that enough really here in the UK, and I'm sure it's the same also generally in the Northern Ireland area too. But it's something we'd really love to encourage. And so I always say any entrepreneurs, consider your next step being an investor and give some of that experience back. So thank you so much, Mary. And could you give us a very quick flavour of some of the investments you've made, the kinds of businesses you've been backing?
Yeah, so I did in the previous tax year, the tax year that's just finished, I invested in 6 early stage companies. One of them was from the QUBIS group, actually, which we've just been talking about this morning. So one of Oisin's businesses, which was a marine tech, but also a sports tech, a health tech, an e-commerce company, but a skincare product and cable clips. So a real mix of things. And 4 of those are Northern Ireland based, and 4 of them have female founders. So I tend to personally look for female founding teams. I tend to look for something which has an element of tech for good. And I also look for a project where I can personally add value through my own network or through my own previous experience. And that summarizes really what the types of investments that I look for.
Thank you. And again, I think that's another great, strand there, which is generally when we start investing, we tend to invest in areas and industries and sectors we've been familiar with, and we're using that knowledge and understanding and experience to take those decisions. So that's great to hear some of your investments, but also how active you've been. So thanks for that. Turning to you, Michael, now, just to give us again a little bit of an overview of how you came to start angel investing, a little bit about your approach and some of the investments you've made so far, just so we can get another feel for another journey to angel investing.
Jenny, I think we've temporarily lost.
Oh, we lost Michael. Oh,
temporarily,
gosh.
Hopefully.
Wow. Okay, thank you. I'm obviously, well, I will turn to John and hope that Michael manages to return to us. Otherwise, we'll be doing I'll be talking about my investing next. Otherwise, so hopefully, Michael will return to us. But John, in the meantime, and obviously by no means not a very important area to talk about, can you say a little bit more about HBAN? Really, its focus here in Northern Ireland, and who's part of HBAN? What kind of investors have you got in your group?
Sure, I suppose HBAN has been going since about 2007. So if we take that holistically, it's been going on the island since about 2007. We've done over 600 deals in that time. We've done over 135 million has been invested by the HBAN investors. But on top of that, about 235 million has gone in. So the guts of 400 million has been invested. So there's a significant amount of capital has gone into those 600 companies. The angels themselves, we have about 600 to 700 at any one time that are on the network itself. We constantly need to refill that bucket. That's my call out all the time, is that we have people who invest a number of investments, up to 10 investments in some cases, but then they need to go off and look after the babies. So we need to refill that bucket all the time. And I see we've got Michael back now. So who are those angels in Northern Ireland? We've got about 100, 115 angels in Northern Ireland. One of our remits is to try to cross-border investments and to share deal flow so we can all see what's happening. Very conscious that the tax incentives in NI are very favourable, so there's a huge weight towards that. But what we'd like to see is good quality investments. And Mary spoke about one of her investments there, which I believe is a cross-border investments. We've seen about 4 so far this year. So we're getting there. It's slow, but we're getting there. The angels themselves, typically cashed out entrepreneurs or large multinational executives coming back from overseas stints where they'd like to plug into their networks. That's the type of profiles that we see. I suppose a lot of what we say is about de-risking your investment if you're coming in, particularly if you're an advisor. It's very much about how do you de-risk an investment. If you go in with a group of 15, 20 angels, you're far more likely to de-risk it because somebody in there is going to have that deep domain knowledge to make it a success. And that's part of how HBAN, and we have 12 syndicates on the island, we have 3 syndicates overseas. They are starting to make successful exits now, and that's a really important thing. We saw 6 in one syndicate last year alone. So we're beginning to see some successes.
Thank you. And I think that's very important. I mean, 2 things. First of all, that the importance of being part of a network, because obviously, you know, as an angel, that helps you find great deals. It also gives you all that kind of contact with others who've got maybe more experience or different sector experience. And obviously, of course, you spoke about syndication, and we'll come back to that shortly, but syndication being a real part of helping people to work together, share that risk. And so I think we'll just move on a little bit towards that risk discussion as well. And now I've got Michael back, which is fantastic. Hopefully, Michael, you'll stay with us. I wonder if you would say a little bit about your journey and your approach to angel investing, and then we might have a little bit of a conversation about risks that John's just already touched on. So, Michael, just to hear a little bit about how you got into angel investing for everyone listening today.
Yes, first of all, thanks a million for allowing me to join the panel. It's been great so far this morning, and apologies for the technical issues I had a few minutes ago. So yes, I suppose over 30 years ago, I helped found a software company, and it was an overnight success after 30 years. We eventually had a couple of transactions. The final one allowed me to exit the business a couple of years later after kind of just helping the new owners settle in. And since then, I didn't really know what I was going to do after that point. I got into angel investment by accident, probably about 3-4 years ago, and just really enjoyed the whole process. I've now have over 30 investments, most of them in Ireland, North and South. And usually early stage companies, sometimes pre-revenue, but almost always, low revenue, early stage customers. So really enjoyed the process. That some of them I'm actively involved in, and some of them I'm not, and that's absolutely fine. So to go back to your question around risk, Jenny, I think what's common with most angel investors is that they absolutely know what the risks are. They can generally afford to lose everything that they've invested. Not that they go into it hoping that's the outcome, but that's the nature of it. They've done well from their own business, from selling their own business or whatever other source of revenue they have, and anybody can put money into a fund or a bank, whatever, and earn a little bit of interest. This is completely different. This is really around using your own experience to try and help others. So a lot of the time the risk is secondary. The main thing is just trying to help other businesses. My own personal situation after 30 years, starting with a company of 6 people, to finally having over 170 in 3 different locations in Ireland. I've learned a hell of a lot in that period of time, made lots and lots of mistakes. And I suppose this is really about helping other businesses avoid making those same mistakes, and to try to bring that transaction down to a little bit shorter than 30 years.
Great. I think we're just having another little difficulty with Michael, but I hope everyone heard all of that. Great. So, I mean, the important thing that came over for, it's all about reusing that experience and rebuilding from the business experience that you've gained over these years, and then having that confidence to kind of reuse that. So hopefully that's a big part. And then a second part of it, of course, is understanding the risks that you do and backing the businesses, using your experience, those investments. Member of HBAN as well, so part of the network. So hopefully all that stacks up. Course about EIS, and I wonder, Michael, do you make use of those tax breaks to help mitigate some of?
I do, yes.
Maybe I'll turn to Mary for that. Oh, you do, right?
Jenny,
Michael,
hearing Michael?
You okay?
Yeah, I can hear you perfectly. Yes.
Right.
Michael,
okay.
We can hear you perfectly. So just go.
Great. Must have been me then. Okay. Perfect.
So the question was around taking advantage of the EIS breaks. So absolutely, and that also helps mitigate the risk. Yeah. You can offset any losses that you might have against your income tax. So quite often with angel investors, that would be the first question they have: does this investment qualify for the EIS tax breaks? My own personal situation, it doesn't mind too much. I'm a resident outside Dublin in the Republic of Ireland, so I benefit a little bit from the UK EIS breaks, but I do benefit from the same breaks that we have in the Republic of Ireland. So it is a benefit, yes. I know that certain angel investors, they will always look for that. That's not my situation. I'm much more interested in the people and the products, and I'm passionate about many of the investments that I have, And just like other angels, they generally invest in something that they either have a little bit of experience in, or just see this as a great business with lots of opportunity, and willing to do what we can to help them achieve their goals. So just to go back to the original question, absolutely, it is a huge benefit to angel investors to the EIS scheme. So that's I say most investors will look for that EIS approval prior to investing.
Thank you. And again, there's two big examples. Fantastic. Reusing your experience, your insights to choose the right deals and make the right investments, and then obviously using the tax breaks to give you that additional sort of comfort around that, help to mitigate the risk. So that's really, really important to know. And another aspect, coming back to you, Mary, is about kind of the kind of portfolio, and how you use that also to perhaps spread your risks. As well as that John made about being part of a syndicate. Could you say a little bit more about that?
Yeah, I don't really know how this has happened, but it would appear that my own portfolio has become a bit of a guild in the old-fashioned sort of sense. So I often do work hard in introducing the companies to each other, because quite often there's complementary assets or resources that are there for them, and so that's just sort of the way that my own portfolio has grown. A lot of the companies know each other, they help each other with things, and they swap stuff around, and I think that's quite a good approach, and hopefully, and I'm sure that other angels do that as well, Jenny. But yeah, the portfolio is an interesting thing on its own, really, isn't it? And Mark or Rod talked about this earlier, the way that some of them do really well, some of them just die, and some of them are just motoring along in the middle there. But that is, if I think about how my own portfolio has grown, the first 3 investments that I made them on my own without a syndicate, and all 3 of those companies have gone. So they were bad bets.
I mean, but that's the interesting thing, isn't it? I mean, first of all, we all, as angels, when we start, I mean, you have to allow people to make mistakes. That is part of it. The other part of it, of course, is when you're in a syndicate, you've got other experience around you as well, helping you kind of make those decisions. And then there's obviously the application, as you say, of your own experience. And, and it is very much a learning process, isn't it, as we go along. So, so that's fantastic to know about. I mean, just moving on about growth and returns, perhaps it's quite early in your portfolio, Mary, for you to say much about the growth, or what kind of growth have you seen so far?
Well, I have invested in 14 companies so far over 6 years, and got my first exit last month. It was Elemental Software in Derry, 2 fantastic female founders, Leanne and Jennifer. And that particular investment had taken 4 years and 7 months to cook. From the first time I put any money in, I was first money into that company until exiting. I'm not permitted to say what the return was, but suffice to say that it's, it more or less covers off everything else that I've invested. So I'm very happy about it.
So that's a prime example. You have a portfolio, you said, some don't do so well. You get the one that helps to cover off all of the risks. And I think that's something incredibly important to bear in mind, that's how it works. So that's really valuable. Wonderful to hear that it was a female entrepreneur as well who had the great exit. So wonderful to hear that. And John, just flipping back to you about kind of growth and returns and your perspective on HBAN's successes, that people have achieved as angels within HBAN.
Sure, I suppose one of our syndicates, the Bloom Syndicate, would have, I think I mentioned it earlier, have done 6 exits in the last 18 months. 2 of those companies, one was Decawave, which exited Corvo for $400 million, and the other one was BoxEver, which exited for, I think it was $125 million. So our angels would have got somewhere between 8 and 14 times the money back on between both of those. Typically, we are seeing I suppose that sort of 5 to 20x returns. But then there's a lot of companies where you just get your money back. There's a lot of companies where they become lifestyle businesses. You get nothing back, but you get a lot of satisfaction and seeing the guys do well, but you'd rather they were returning your money. And then there's a lot of ones that just do not succeed, and that's the nature of the beast. And I think Michael made the point that as long as you understand that risk, you're happy with it. There's a lot more that you get from it. But the returns are important ultimately, especially if you're an advisor. You want to make sure that your clients get the returns, and the returns are there. They are coming. Mary got it in for 4 years and 7 months, which is good. Our best one was a medtech one that we got back 7 times our money in 9 months, which was most definitely the exception and not the rule. But it is great when you get those.
Yes, thank you, John. And of course, one of the things we all know about angel investing, it's what we all call it patient capital, because it's a long-term game when we invest. And that's something, again, as advisors working with their clients, you can't predict the returns, you can't predict the time frame, but it's all that application, as you say, of experience, of hands-on support, of advice, introductions, etc. And then the great opportunities when they come, and that's what makes it fun. I think we all agree as well. So that's very good to know. Thank you, John. I mean, turning back to you, Mary. You've mentioned a great success you've had with female entrepreneurs, but I know both female entrepreneurs and as a female investor, these things are important. And I think we already heard from Tim talking about, obviously the great backing he gave to Christina and the importance this is for investors. And I think very important for Northern Ireland too. Can you say a little bit about what you're doing?
So, yes, along with a few of my friends, I've started a female founder community that's cross-border on the island of Ireland. It's called Awaken Hub. And we've been gathering female founders for the last 12 months or so. And so we've been surprised. So far, 1,200 women have joined Awaken Hub, and we've just had a bit of funding from Ulster Bank in Northern Ireland and Rethink in the Republic to launch the first ever cross-border accelerator for women only, which is called She Generate, and we're doing the launch this evening at 5 o'clock if anybody would like to join us. But the community, Jenny, is just the first part of this. We've heard other people speak this morning. Stuart spoke about this, and John has talked about this, about there being just not enough women investing in other startups, and particularly in other women. So I guess stage 2 of what we're doing will be to try and figure out how we can activate that community of women to start investing, both for their own benefit, but also for the benefit of women founders who are frequently in a situation where they just don't have any investors at all that are a woman. And Michael will be familiar with this with a lot of the investments that he's familiar with. They're just, even if it's a female founder team, there won't be any female investors at all. I mentioned that I'd invested in a skincare product. It's a skincare product aimed largely at women. 70% of the customers are women, but I'm the only woman who's invested. All the other investors are men because they see it as purely as a financial opportunity. But the women just aren't there.
Yeah, and it's very important, by the way, because this is a shared issue, across the UK. I see it too as well. But for any advisor saying, well, isn't this a bit too risky for women to do? As a great, but what would you say to people who think women shouldn't be investing?
So I have made a short list here of all the great things, the reasons why women should do this. So I think giving back and helping others, which a lot of people mentioned already today, and especially if you're a woman, helping support other women. The Irish and UK tax incentives, if you are a high net worth, or if you're someone that earns and pays high rate tax, you're kind of crazy not to do this, because the tax benefits and the tax breaks are all there just waiting for you. I suppose in a world where interest rates are so low, making your own capital work for you. And it's got to be good when so many middle-aged white men are doing this and protecting it as their own asset class that women just aren't really a part of, when how things are at the moment. and then tech for good and improving society as a whole, I suppose. Also, it's great fun. It's very satisfying, and it's really good when you feel that you're helping somebody else get their business up and running and succeed. So that would be my reasons why it's a good idea. Yes, it's risky, but as Michael's already said, everybody's aware of that. And if you're an exited entrepreneur, you're kind of a bit on the risk scale anyway. So it isn't any worse than anything else that you ever do.
Jenny, just to help that.
Yes, thank you, John.
Sorry, I was just going to say we've just did a survey ourselves. So of the last 2.5 years, we've done 177 deals, but 25% of those have been into female founders. So that number has grown hugely in the last number of years, which is great, but it hasn't yet translated into the female investment side, which is still a lot lower than that. So yes, we'd echo that.
Yes, thank you. And as you probably heard before, our research has shown at UKBAA that we did right across Europe as well, is that women have a significant number of female founders in their portfolios. We back other women, and so having that mix in your investor group obviously enables those female founders as well kind of find great women, as investors, and people who are great mentors and coaches like Mary as well. So thank you for that. Just turning to you, Michael, again. I mean, if you were, if you had advisors say to you, well, Michael, I've heard about your investing, and it all sounds it's fine for you, but I've got clients who I'm quite worried. I would suggest angel investing to them. What would you say would be the kind of people they should be looking for to bring forward to a group like John's?
Well, I would certainly research any of the angels that you're thinking of, because if you pick the right one, it's like opening a birthday present. They can bring a whole box of tricks to your organization, and they're all absolutely willing to help. So just choose carefully, because you can easily pick the wrong match, and it's really important to try and get a good match, somebody who's going to bring value to the organization, not just in terms of the capital, but in terms of their contacts, their experience, etc., etc. But don't let any of that frighten you off. There are also angel investors who just want to put some money in and sit back, and if there's a return, great. If there isn't, then that's fine too. But just be careful, I suppose, I've come across angel investors who really can be disruptive of organization, of companies and organizations. So look into their history, maybe chat to people who've companies that they've invested with previously, and see what their experience was. But they have a huge amount to offer, angel, and it's not just capital, as I say. I mean, the capital, I've said it earlier on, it's secondary. It is, if I think of just my own personal circumstances, going from a company of 6 people to 170, that growth, I took on many roles in that, and during that time. My passion's always been around customer success, but HR, recruitment, financial planning, business planning, all of those things, I have lots and lots of experience of. So again, that's the sort of investor or angel investor you'd be looking for, somebody who can really help drive on the business. And most of the time they don't want to disrupt things. They believe in the people. They believe in the product. That's what they're buying into, is your passion for what you do, and the product seems to make sense, and there's a clear market for it and clear strategy to get that market. So they don't want to disrupt. They simply want to offer help when they feel it might be necessary. So that's, in terms of who you should be looking for, HBAN's been great, Co-Fund's been great in introducing me to clients, so I'd certainly reach out to the guys there. Been tremendous help. There's other networks as well. A lot of male investment have come through the angels that I've met on my from various different investments, and they introduced me to another company that they might be interested in, because they knew I was interested in the last one. So that's I mean, Northern Ireland's a very small place, and so even if you don't hit it with one angel investor, ask them, is there anybody else that they know who might have an interest in it? And that's happened lots of times with, I mean, there's 5 or 6 guys who I have invested alongside, angels I've invested alongside, but not all. Some of them are no interest in me, and some of them have no interest in the other guys, and some of them I'm absolutely passionate about. So you know, there's an angel network out there so if you can make contact with one, they may well be able to introduce you to others also.
Brilliant. Thank you, Michael. That's really helpful. And just turning back to you, John, now, and if anyone's watching who has clients who would like to be part of HBAM, or they themselves, as we all know, there are many people from professional backgrounds who become angel investors. What would they get from HBAM? How would HBAM sort of help them to kind of start investing and do that as effectively as Michael and Mary do?
So a bit like yourself and Rod with the UK business angel groups, we do an awful lot of education. We have an awful lot of resources up on the website, between videos that we would have done over the years, but also documentation, just in terms of what our standard term sheets look like. What's the explainer docs behind those? Why do you use all these? What do they do? What's a loan note? How does all that work versus equity, and all the differences between safes and all the new stuff that's coming down the line? So we have all of that collateral available. We have all the videos available. That's the educational piece. But then we also have the 12 syndicates on the island, and we also have 3 or 4 international ones as well. So we can connect you with a multitude of different angels who have different deep domain knowledge. So we have a medtech syndicate out in Galway, massive deep domain knowledge within that sector. We have a food syndicate here as well. We have generalist tech, which primarily invest in enterprise SaaS. So that kind of access to expertise, which allows you to de-risk any investment that you have. Just coming back to something that Rod mentioned earlier on, and I think also Mark mentioned, that the average investment side is not massive. People think they need hundreds of millions to come into this. And I'm saying 80% of our investments last year of individuals invested was 50 grand or less. 50% were 25 grand or less. So when you start seeing that amount of capital going in per deal, it makes it a lot more accessible, and it's easier to do.
Yeah, I think that's a really important point about the wealth, because we talk about high net worths and it kind of sounds like they have to be super wealthy, but remembering that also with self-certification, you know, it's all about experience and you know, and expertise, and being able to give that back too. So thank you for that. And just in our final moments, I'm just going to turn back to you, Mary, and just say, obviously, you've made the point about, you know, more women, and more women also available to back women, but more men to back women as well. But generally, what would you say to both anyone contemplating angel investing for themselves, or to anyone who knows people in their own client base who they feel at this moment they've been a bit wary about recommending this to them?
So I'm going to stay with the women here, Jenny. And
Yes,
I'm going to say, if there's any women in the audience today, or anyone that knows a woman in the audience that might be thinking about angel investment, get in touch with us at Awaken Hub. Come along to our She Generate launch this evening. Come and talk to us. Come and meet some like minds. Come and meet some other women who invest and have invested, and learn about it from the horse's mouth. That's the best way, I think.
Thank you very much. You should feel free to put the little link to come to the event or something in the chat if anyone wants to see it. So that would be good. I'm saying that, Sue. I hope you don't hit me for that. I think it'd be really great. More women, please, joining Awaken and start backing more women, female founders. And Michael, people to, you know, what would be the final point for you about what someone might get out of angel investing if they were to start investing from today?
It's great fun. That's the first thing I'd say. It's hugely rewarding, giving back you know, some of their experiences that you've gained over a number of years. Hugely one. It's not intrusive of your time, because most angels are like their free time, you know, so it's not too intrusive. It's you know, you can choose to be as involved or not involved as you like, but you will find a company that you are really passionate about and you really believe in, and that's the most rewarding of all, is whenever you find something that you believe in and you'll go back again, and even if you're losing money, you'll go back again and again and again until eventually you help the guys make it work. So you know, this is a you know, a bit of fun, I suppose, is a simple way of organizing, but it's hugely rewarding also.
Thank you. And I think that is the big note. You know, it has its rewards on all levels, financial, but also really, you know, really personal gains from it too. So fantastic for that. And just very finally, John, we're going to send some notes out, I know, through British Business Bank and our society here about how to get involved. But is there anything final that you'd say if just someone wants to join?
Just get in touch with us. It's hpan.org, and you can get me at john@hpan.org or info@hpan.org. We're always looking for new angels. It's great to meet new people. We met Michael recently. You've known Mary for a long time. And it's good to see new blood coming in, and obviously women if we can.
Thank you. Well, I think this has been a fantastic way to find out more about the real life of a business angel, the real opportunities that you may have to engage with this space, both through your own clients and hopefully some people also watching this today who may have been considering it themselves. You've learned you don't have to be very wealthy. It's all about syndication. It's not risky because there are so many ways of working past that through experience, through syndication, and of course using the tax breaks. And most importantly, Northern Ireland needs you to start investing and needs you to bring your clients to invest. So many great entrepreneurs, so many more angels needed. So that's my rallying cry for today, and anything that we can do to help with this at UKBAA, working with HBAN, Mary in her Great Awaken, and Michael in all his work, and obviously British Business Bank and our colleagues at the Ulster Society, Ulster Chartered Accountants. So delighted to be with you today, and thank you very much for having us at UKBAA to help with this. I'm going to pass you back to Sue Nightingale now, who I know is going to wrap up on behalf of British Business Bank. But thank you all. Thank you, my wonderful panelists.
Thank you, Jenny.
Thanks very much.
Thank you.
Appreciate it. Thank you.
Thanks, Jenny. Some really key messages there for the audience, I think, and hopefully what the panelists have said will resonate with some of the listeners and encourage them to come forward and join the networks. So, folks, one final ask before you go today. Karen, if you could do the honours, please, and launch the poll for me. Just if you can take 1 minute to complete the 2 questions, just in terms of how you find the session and then any actions you might take off the back of it, that'd be great. You'll also receive a short survey link from the Institute following the event. And again, if you can just take a minute to complete that, it really does help. So just when you're doing the poll, I just want to reiterate what Jenny said there in terms of thanking everyone involved over the last 3 weeks, our individual speakers, panelists, UKBAA, Scale Up Institute, Ulster Society for offering us this platform and facilitating a seamless delivery, and you, the audience, for giving up your time to join us. I hope we've achieved what we set out to do in terms of our 3 goals for today, but also across the wider webinar series, and that you're leaving us much better informed about the finance options that exist to support ambitious SMEs on their growth journey, and also your role in helping your clients identify and secure the funding package best suited to their needs. Please feel free to reach out after the event if anybody would like any more information or on anything we've covered in the last 3 sessions. I hope you find it very useful. That's all from me, folks. So time to go and enjoy some lunch, and thanks again.